Abundance Stock Advisors. Let's make money.
Hello and welcome to Abundance Stock Advisors. In this video, our experts will help you gain all the basic stock market knowledge that is required so that you can start investing in stocks. The video will help you understand how the complete stock buying and selling transaction works, what different players are involved, how and why a stock price changes, the different types of traders and investors in the market, etc., etc., etc. So, to get notification onto this video and many other life-changing future videos, do subscribe to our channel and don't forget to press the bell icon. Stay tuned.
Welcome. Friends, all our videos under the ZOP series are technical in nature. They are not for entertainment. Every video will take you towards profits. It's a guarantee. So please watch carefully till the end. Now coming to the topic, let's go ahead and understand what a share market is and how it actually works. So there's a trader friend of ours, Mr. Rahul, who owns a clothes shop, which is doing phenomenally well. After a couple of years, he opens 5 more branches in his state. And after 10 good years, he opens 40 branches across India. The business is doing exceptionally well. Now, Mr. Rahul wishes to expand further and open multiple branches across the world. But for this, he would need more funds. Let's say 5,000 crores, which Mr. Rahul is not having presently. Now to raise this money, he has multiple options like approaching an individual financer, taking a loan from a bank, etc., etc. But all these options would require him to pay interest on the borrowed money, which would eat away his profits. And what if these new branches do not do well? Then there would be tremendous losses. So what next? Now, Mr. Rahul would turn towards stock markets. He will approach public and raise money via IPO, that is initial public offering. Rahul's company would issue shares, that is partnership in the company, to people, and if people feel that the company is likely to do well, then they can become partners in the company by buying those shares at a stipulated price. Now that way Mr. Rahul raises interest-free money and his risk also gets distributed amongst people. The IPO will get launched in the primary market and the company will get listed in the secondary market on the stock exchange where the shares will get traded. Now this combination of primary and secondary market is called share market. Now that's as simple as possible. Now what benefit do people derive by buying shares in Mr. Rahul's company? Now when the shares of the company get listed, the trading starts, and when the share prices goes up, people will make profits by selling those shares at higher prices. That's it. So this is a win-win deal for people, Mr. Rahul, and also the country, which benefits indirectly. And yes, to make sure that all these transactions happen clearly without any cheating, SEBI, that is Securities and Exchange Board of India, it acts as a regulatory body. For example, like we, Abundance Stock Advisors, are a SEBI registered research analyst group licensed to provide stock recommendations. Now, if this service is provided without the registration from SEBI, then it is deemed illegal. So SEBI has many kinds of rules and regulations which ensures that the investor interest is safeguarded and you can safely invest in the stock markets. So now let's see how stock market works and how a complete buy and a sell transaction happens. Now the buyer and the seller come together in the secondary market to buy and sell shares. The buyer feels that Mr. Rahul's company will do well in foreign countries and hence he is interested in buying its shares. So the buyer, he logs in his trading account and places a buy order for say n number of shares. Now there are millions of such buyers and sellers in the market, and so to handle transactions between them, we have brokers like ICICI Direct, Zerodha, etc. The trading account is provided by the brokers. Without a trading account, you cannot trade. Now the broker passes on the buy order to the exchange where the stock is listed. So NSE and BSE are the two prominent exchanges in India, and it is the exchange which actually connects the buyer and the seller. The moment the exchange gets a seller, it confirms the buy order with the broker. The broker then completes the transaction of buying and selling. Now that the transaction is complete, the seller should get his money and the buyer should get delivery of shares. So whose responsibility is this? The clearinghouse. The clearinghouse makes sure that the give and take between the buyer and the seller happens smoothly. The clearinghouse gives a guarantee to both the buyer and the seller that this transaction of theirs will be executed successfully at all costs. The moment the trade gets completed, the buyer gets the shares in his demat account from the seller, and the seller, he gets money in his account from the buyer. Simple. And by the way, your demat account is with your broker and you get this with your trading account. So that's how a complete buying selling transaction is executed. Now let's try and understand how a stock price moves and how the buyer and seller make money in the process. Now both the buyer and seller are tracking the share price of Mr. Rahul's company. And there comes a news at 10 o'clock that in 1 month, the American store of Mr. Rahul's company has made a profit of 100%. Now this is big positive news. At 10 o'clock, the share price was 3,000. But now a seller wants 3,100 per share. Fortunately, a buyer is ready to buy the shares at 3,100 because he is bullish on Mr. Rahul's company and feels that the share is indeed worth 3,100 rupees. So now, at 1 minute past 10, the share is quoting at a price of 3,100. And now another seller wants 3,200. Another buyer is ready to buy the shares at this price. At 10 past 3, the share is quoting at a price of 3,200. This continues, and in just 3 minutes, the share price rises by 10%. So the stock is rising because the demand is rising. The buyers are feeling that the company will do well in future. And sellers are selling because they feel that the company might not do well in future. So technically, it's just a different perspective which the buyer and the seller have about the company, which is indeed driving the share price. The buyers are always bullish and the sellers are always bearish. If there are more buyers in a share, its price will go up, and if there are more sellers, its price will come down. That's how the prices of shares go up and down. I mean, it's as simple as that. Now, we will see the different types of players investing in the stock markets, and we as retail investors should fall in which category to make money. So, the first type is intraday trader. This guy buys shares in the morning and sells them before the markets close. In the whole day, he buys and sells many shares. The second type is scalper. This is a guy who buys shares in bulk, in huge quantities, and sells them the moment he sees very little profits. Now the third type is swing trader. This guy buys shares, waits for a little longer, say a day or two, and then sells the shares. Now all these players fall in the trading category, and most of the times they are in tremendous losses because traders rarely make money in the stock markets. Today they make 100 rupees and tomorrow they lose 200 rupees. That's the game that goes on and on. Now let's talk about the second category, that is the investor category. The first type of player under this category is growth investor. This guy buys shares of those companies which in future are likely to show phenomenal growth. This guy holds these shares for a longer duration, 1 year, 2 years, 3 years, with a lot of patience. And then when he sees that the share prices have gone up significantly, he sells them. The second type of player in this category is value investor. This guy buys shares of companies which are already doing good and profitable, but for some reasons its share price is very low today. This guy too shows a lot of patience and holds the shares for a longer period, 6 months, 1 year, 2 years, and when the share price goes up significantly, he sells them. Now important, we tell all our clients, and you must also get this clear, that stock markets should be treated like an investment platform. Do not make it a trading platform. Just to repeat, traders do not make money in the stock markets. You can try trading for yourself for say 6 months to get a feel of what we are saying. So you need to fall in the investor category to make money in the stock markets. Just like you invest your money in real estate, you never expect your investment to double in a month, right? You know that it's a clean investment and will give you profits after a decent period of time. So on similar lines, in share markets too, you will have to hold on to your shares for a decent period of time. You will have to select the right companies to invest, which will give you huge profits. Now repeating again, if you do trading in stock markets, you will lose your money. You will get lost and confused in the herd of buyers and sellers. You will never be able to decide correctly which stocks to buy and sell. Fear and greed will start overpowering you, and eventually you will end up losing your capital. So try and become a shrewd investor in the stock markets. Some food for thought. If you don't find a way to make money in your sleep, you will work until you die. That's a statement from Warren Buffett. Now, how true is this? If your money doesn't start working for you, then you may have to slog your whole life. The only mantra to wealth creation is that your money should work harder than you even while you're asleep. And that would be possible only when you invest right and invest early. Don't wait for a big amount to get accumulated. Start with whatever you have. It's very good to experiment with smaller amounts. You will get to learn a lot. Start small, but make a start. History has proven that every man who accumulated wealth, he started small. And remember, you are a tiger here. So let the roar get louder and louder. Go and break all those shackles. Make a start. It's important to make a start. So friends, if you are a serious investor in stock markets, do think about joining our YouTube channel. This channel joining is a new feature launched by YouTube recently, and all these premium members who join our channel get a lot of exclusive benefits. And to know more about these benefits, do watch our channel joining video, link of which can be found in the description below. There are many other amazing technical videos on our channel. Do watch them. They will change your life as an investor. It's our guarantee. Please like and share this video. If you have any questions, do let us know in the comment section. We will surely reply. And to get notifications on all our videos, do subscribe to our channel and press the bell icon. Thank you. Jai Hind.